Nadia, thank you. Excuse me. I hope you will forgive my rather weak voice. The one advantage for you, and in fact for everyone, is it means I will ask shorter questions. Actually, Hector, before we get into everything, can we just talk about a couple of the points that Nadia just made? So, Anna started this conversation this morning saying we in Europe need to address the issue of deregulation. You know, Nadia is a very candid person. She's saying that's not the conversation we're having in Brussels. There's quite a big gap between what we're discussing on this stage and what's happening a few hundred miles up the road in Brussels, if even the conversation about deregulation is not happening.
Look, I think that you touch a critical point. First of all, thank you very much for being here. It's a pleasure to have you here in Santander. Welcome. And I'm glad to be here with you. Hope I can give you some insights of what we're seeing. I think you touch a critical point. If we don't name a cat, it's very complicated to get through to it. And I think it's quite important to really acknowledge what we had in front of us and to understand Europe is not competitive. That's my point of view. I've been here in Europe living for the last 3 years, and I live it through. And this is something that we really ought to change in our mentality. Let's not be afraid of basically doing things that are required to get us to the place we want to be. And not we want, we need to be, because there is no other way. I believe growth is exactly what needs to happen to the world.
But I suppose, Hector, the issue that arises is whether or not the entire system, the marketplace for capital and investment in Europe, is disincentivizing growth. And I wonder whether we can sort of zero in on Santander for a moment, right? We've sat in this room with investors who have, in the last few years, said, look, you need to return more capital to me. And the result of that has been you have returned more capital to them, and the stock price has gone like this. But what does that say about the distribution of capital into small enterprises? What does that say about the use of banks as a driver of growth?
Look, you touch a very important and sensitive point. I've been in the financial system for almost 40 years. And this is the first time in my life that I see that investors basically want their money back when banks are basically having ROTEs of above 15-16%, when the freeze rate is around 3 to 34, that was projected when Anna was showing this. So I don't get it. So give me my money back when I'm giving you 16.5% of ROTE, and you go and invest the money back at 3.35. So tell me about it. Why do you want the money back if we have such returns? And the reality...
Let me just understand. The investors say, even though you're delivering higher return on tangible equity than ever before, we still want the money back, even if we're going to put the money into investments that not necessarily have the same level of return. It's a comment on the banking system.
No, that's exactly what they're asking us. Look, the banks that are very valued in Europe, I'm talking about Europe, okay? It's a very important difference between what people and investors are seeing elsewhere and what they're seeing in Europe. What they're seeing in Europe is basically give me my money back, because either they believe that the regulator is going to basically put us more density on capital, okay, which is something that they believe. Second, because they believe there is no growth in Europe and we don't have elsewhere to put the capital in, all right, and we're not going to be able to have those returns in the future. And that's exactly what we need to convince them that it's not the case. Because if you take a look, even at mature markets, I'm not talking about what the businesses that we have in the Americas and Latin America, which is a different ballgame. I'm talking about Europe by itself. If you see our Spanish business and Portugal, etc., what's going on, we have a really good dynamic. We're growing in customers every single month.
So I guess what I'm asking, though, Hector, is if you take your hat as CEO of Santander off and you talk about it as someone who's just looking at the bigger economic picture, when you saw Anna's pie chart, the one that has 40% return to shareholders, 30% lending, the rest in taxes. Is your read of that chart that ideally a pro-growth banking environment in Europe would be seeing more lending going into businesses?
First of all, if you want to have growth, you need to have banking as an enabler. Without money, there's no growth. And there is a whole bunch of different things that we need to invest in. Just talk about, the transition, the energy transition. People are talking about trillions and trillions of dollars that are going to need, and for 2050, we're talking about 20 trillion just in Europe to do the transition. Just in distribution energy lines, what do we need to invest? So it's tremendous. So don't tell me there is no growth in Europe. The thing is, we need the enablers in order to basically give us the right incentives for people to invest and for people basically to turn around and look us in a different way. And we need, in my opinion, the regulation in order to get to that. Because also what happens is a lot of the talent that we have in Europe, which is tremendous, goes elsewhere because we don't have the capabilities to give them exactly what they need.
Can we talk a bit about trade and growth? So when I look at what's happening in Mexico, when I look at what's happening in Argentina, in Brazil, there are people who are beginning to talk about a new page turning for Latin American economies. Some people credit Donald Trump. There is a question about whether or not you're beginning to see new engines of growth in Latin America and whether or not you're seeing more traffic from Europe into Latin America. I imagine Santander has a better lens on that kind of business, though, that kind of exchange. Is something taking off? Are we seeing something new?
No, we're starting to see, for example, a lot of growth igniting in what the European companies are basically looking at. We are one of the biggest players in trade finance, and what we have seen is a lot of trends. And a lot of Latin American companies basically investing in and bringing technology from Europe into their countries. Yeah. The important thing is that also we see a lot of the Chinese playing in the game, which we didn't used to have. So you now visit Latin America and you see a lot of Chinese cars. So it is important that we get our game in order. And I'm talking about Europe vis-a-vis what we have in Latin America, to go back to your question, is that we need to get our game in the right way, in the right track, very well organized and focused into what Europe does best. If you go back 20 years ago, 25 years ago, when I was an investment banker, Europe used to be the point in many different things. You talk about telecoms technology. Everything was done in Europe. Europe was a real driver in that. And we have lost that edge, and we need to find it again, because the talent is here, and the capital is here as well, because remember that we in Europe, we export 200 billion of capital every single year to the Americas.
Can you talk a bit about AI, and in two contexts? One is, we've been here, Hector, and talked about AI and the allocation of investment that Santander is making in AI to transform systems within the bank. But there's also a question about the extent to which AI platforms will disintermediate Santander and all of the banks, and the bank's role as a distributor of capital and a driver of growth will be limited. How do you see it?
That's exactly what a lot of people think. My point of view is a little different than that. First of all, AI, we need to use it as an enabler, as I was, as you're referring to. Is the amount of productivity that we can get out of AI is tremendous. Just our own programmer, basically, we can do what, and that's basically what our team basically says. You have an OK programmer, an OK coder, basically turn into a AAA guy just by using AI capabilities. It's tremendous, and we have done it ourselves. Yeah. And we're implementing it, everything. So productivity goes up at 30%, right, when you get AI into programming, into coding. So it's tremendous, and changes completely. And we have seen the way we are basically modifying the way we interact with our customers, basically using AI in many different ways. And I think it's going to help us to be much more productive. But one part which is tremendously important about a bank is that at the end you want people on the other side. And that's why we talk about Santander being a digital bank with branches, because at the end, I do believe that the best CX and the best AI together with the best physical infrastructure is an irreplicable game in order to be very successful vis-a-vis what's going on. Some people basically say that we're going to be completely disrupted in the market. That's not my point of view. At the end, we see the way people act and the way that people, because at the end, we're talking about money and trust. And that's something that you need to feel it.
So can I just ask then about AI in a different context and growth in a different context, which is as regards jobs and employment? Because I think, Hector, you and I and lots of people in this room are so transformed by the experience of the financial crisis that we keep an eye out for inflation, we understand or worry about how interest rate movements affect things. We haven't hit a kind of growth but low employment cycle for a very long time. And what you're beginning to see in the United States is growth, but not necessarily employment growth. You're seeing in Europe a growing unemployment problem, particularly among young graduates. There are a lot of pressures on jobs, which growth, as things currently stand, don't look like they're fixing. So how does a bank, which is, if you like, making the fundamental argument for growth, also make an argument for growth that delivers jobs?
That's a tremendous combination that we ought to basically be able to realize. I think that, and I'm not a believer that AI is going to destroy all the jobs. It's going to change actually what is the way that jobs are today from what they're going to become tomorrow. And we have seen it with all this technology coming in. And the way basically we use people and the way we turn the jobs into different things. So what's going to happen is we're going to become much more efficient, much more concentrated in the customer, much more centered in what we need to do instead of basically doing a lot of repetitive things and processes. We're going to simplify the businesses, we're going to automate them. And that's exactly what we're trying to achieve and do global platforms in order to treat the customers in a different way. But that basically doesn't mean that we're going to lay off thousands of people because of that. I think we're going to readapt in the way we do things. And we are, let me tell you what we're doing in Santander, for example. I mean, a lot of the people that we are moving from from operations and from some of the back part of the job, we are moving them to the front. And we are reskilling people in order to be able to do that.
To be a more personal business.
Yeah, because at the end, there's a lot of different things that we need to do on a day-to-day basis, and it changes the way that you interact with the customer.
Can we talk a bit about the United States? So there's been a lot of discussion this morning about Europe and its growth problem. And by implication, I was sitting in the front row saying to one of your colleagues, we're all going to have to move to the States. Basically, that's where the growth is, that's where the business is, let's all move to the States. But there is an argument that the US is storing up problems for its future. That if you look at its spending, if you look at its debt, notwithstanding being a reserve currency, there is a lot of structural challenge within the US economy. Do you buy that view, or do you just look at Anna's slide and go, my God, there are the big companies, that's where growth is?
I think if you remember probably a couple of years ago, I remember that we were discussing, or I don't know if it was a year ago, when we were discussing Trump coming in and the big deficit of the US. And there was one, I believe, somebody said, I remember exactly who, that basically said, look, the answer to all of that is growth. So you're able basically to have huge deficits if on the other side you have growth.
Yeah.
And going back to Anna's slide over what the difference has been in the debt to GDP in Europe versus growth, this is exactly what it tells you. So at the end of the equation, that's why growth is so urgent, because we could be able to overcome all that if we really make the economies grow.
But then let's just go back to the point that was in effect raised by Nadia, which is we are in a conversation where the politicians are in a different conversation. The politicians are, how do you sustain welfare payments? How do you provide for potential greater unemployment? How do you deal with an aging population? I.e., give me the money so I can spend on the social needs. And in effect, Hector, you're talking about a group of banks, a group of businesses saying, we need deregulation and lower taxes in order to drive growth, and the politicians saying, no, unfortunately, we're going to need the money to enable the cohesion of society. And we're just at odds with each other.
Look, I mean, the important point here is basically to get to a middle ground. If you don't get to a middle ground in which politicians basically stop thinking about the next election and really looking into the long-term basis, it's going to be very complicated. And the big thing that we have between, as we see as managing companies, we see, I mean, our horizon is 20, 30 years. My job is not for the next 3 or 4 years. It's basically make sure that Santander is still here in the next 160 years. Otherwise, my job is basically going nowhere. And I cannot think for the next 3 years. So this is a big change that, in my view, we have to have in terms of really getting into long-term interest and thinking much more in the interest of the whole instead of next elections.
Can I ask you 2 questions about Santander in particular and its leadership? So since we last met in this room, Santander has become the most valuable bank in Europe, the leading bank in Europe. Do you have a different responsibility now in terms of the way the bank talks and engages in a political conversation in Europe?
No, I don't think it's the case. I mean, I think our job is basically to concentrate and to continue taking the bank to the next level. I don't think that, I mean, it's great being the most valuable bank in Europe, but if you compare us to our peers in the US, we're nowhere.
Yeah.
So we really need to basically, that's what Anna was saying, celebrating. Yes, we celebrate sometimes, but I mean, it's 1 minute. At the end, we have still a lot of things to do. We have a great challenge in front of us. It's a very competitive market. We have a lot of competitors in every single part of what we do, and we are being disrupted in the most important part of our businesses, and we need to get our act together. We don't have time for that.
What did you think when you looked at that slide of Anna's, which has that amazing image of new growth companies in the United States? That sort of, it looked like an explosion of cells under the US flag. And then underneath the European flag, this sort of little Petri dish of a handful of small companies. The argument, I suppose, at the heart of this meeting today is that banks can really deliver distribution of capital to drive growth. So what is inhibiting Santander and other banks from delivering the kind of growth in Europe that would mean that we had a bigger collection of big companies on the right?
What I would say is basically we're a kind of a different animal because we're able to distribute capital in different ways because of the diversification that we have. So we have a pool of capital and we decide exactly where do we distribute it and where we allocate the capital. Depends on where do we see the growth, where do we see the trends, etc. But at the end, what it is important is that we do believe that Europe can be an interesting place of growth, but we need the conditions in order to be able to make it. We need the conditions to create investment.
And I just want to pick up on one other thing that Jamil mentioned and that came up in the conversation with Nadia. So there was a period, I think, at the Santander International Banking Conference, it must have been about 3 years, Hector, where the subject of choice was capital markets union, banking union. And last year when Jamil was talking to Nadia, he was like, look, I'm not sure this is going to happen. And Nadia was like, yeah, it really is, we're committed. It's interesting, her change of tone. She says she's less optimistic, more impatient. Honestly, do you think that in the next 5 years we'll see it happen?
I'm not sure. I mean, when you see, some of the, when Chancellor Merz basically came into power, the first thing he said that he didn't see capital markets union coming, or basically the deposits of the Germans basically covering a situation in Spain or elsewhere in Europe. So that's the difficult part. we need to overcome that. I mean, what is basically very difficult for you is fragmentation. Fragmentation is the one that makes things very complicated, and that's what we need. I mean, there is no other way that to work together. And I was saying at the beginning, when COVID, we all had to get together. That's exactly when things change. So do we need something as harsh as that to make Europe really understand that we need to work together in order to get things done?
Yeah.
And that's the big thing.
So let's end there, Hector, because I suppose where I'm trying to drive this is to say there was something very exciting about the start of the morning. And you looked at that last slide where there was, okay, saving and investment union, that's going to increase 10% of GDP. Deregulation, that'll put a couple of points on productivity. You know, AI will help, you know, with another point or two on productivity. But you stand back and you think, actually, you do not have a partner, as things stand in Brussels, to drive the kinds of political reform, regulatory reform, that can deliver this growth. And so how do you get the spirit that you're describing, 2008 financial crisis, COVID, where there's a sense of crisis and things suddenly shift? What's going to get us there?
What gets us there is, I think it's the will. I mean, willingness of change, the willingness of, we have the power, voting for the things that we really want. And this is basically what we ought to have. And that's why people are basically changing the way they think and the way they're reacting towards the political system and what we have seen. That's why we're going into these two streams that they were talking about, of extreme left, extreme right, etc., because we need to find a middle ground in which really gives us what we're looking for. And at the end, what we're looking for is a much better world for everyone today.
Yeah. And it's tantalizing, isn't it? Because it's close.
At the end, we need long-term view. Sometimes, as they were saying, last night, if you remember, we were talking about Argentina. In order to be able to get to a better end, you need sometimes to basically take the harder pills. So that's what basically enables you to get to where you want to be.
Yeah.
It's not easy.
I think that feels like it's the biggest challenge of all, is an acceptance that we're going to have to do some things fundamentally differently.
Sometimes you may have to make sacrifices to get to where you want to go. There's no free lunch in life.
Maybe that's it. Okay, there's a life lesson. Héctor Grisi, the Chief Executive of Santander. Hector, thank you very much. Hector, thank you. Firstly, thank you very much for your patience with this strange and exciting voice. I hope that I mature as a result of it. We're about to go and take a break.
James.
Yes,
here.
Barbara. Yes.
You see me?
Yes. Hello. Yes. I can. Yeah. Whoa.
Okay.
Look at you in the spotlight.
Okay. Now you can see me.
Woo.
Okay. I'm gonna bring everybody, but not virtually and not physically. Then, can you remain seated for a couple of minutes? We have a big surprise for you. You need to look at the screen, and you will see the surprise in a few minutes. But James, you can come with me. People stay
just
here.
Me. Just me?
Yes, only you. Come, and we're going to show everybody what is the surprise about.
Okay, exciting.
Then look at the screen. Okay.
Okay.
Remain here. We promise there is a surprise.
Okay.
Okay. Do you want me to tell you?
Yeah.
We walk.
Yeah. Okay. Okay.
Okay, I'll tell you what is the surprise about. This is, for the first time, we have done something called the year ahead.
Okay.
And the year ahead is an economic outlook that includes all the Santander jurisdictions. Oh. And let me tell you more. This has been done by Santander research team and has been a big achievement. Look, we are traveling into the future. Can you see that?
Oh, yeah.
Okay, then are you excited?
About going to the future?
Going to the future?
Very excited about the future.
Yes?
I'm excited the future is through a few bushes here.
We are going there.
Okay.
Do you want me to tell you more?
Yeah.
Are you expecting that I'm going to give you a report or something like that?
Like a little book.
No, it's not a little book. We are going to get into an immersive...
A banking report.
No, I'm not a banking report.
Okay, let's
We
go.
are going to get into an immersive experience, virtual experience, traveling to the future.
Okay.
Come with me.
Where
We are
is it?
getting there. Would you like to
Oh my
travel
God.
3 minutes into the future?
Okay, cool.
Are you ready for that?
Yeah.
We are going to
Yes,
go in 3, 2, 1. And here is the
Oh
future.
my God.
What do you think?
It's like an economic nightclub.
More or less. It's impressive.
Oh my.
Yeah.
So it's a complete virtual look.
It's a
at the
complete
world economy.
virtual look, but you have the paper too. Then you have here the economic outlook. And again, I mean, you can see source Santander research. This is the first time that we do something like that. And what we want is everybody to come here and enjoy the cube, the virtual cube.
So Barbara, you get to see essentially all of the data in a much more vivid way.
Exactly. That's what it is. In 3 minutes, you will know what is going to happen in the future.
Wow, it's an amazing way to share information. It really is.
Okay, fantastic.
Amazing.
Thank you for
Thank
coming
you
with me
very
to the
much.
future. And then, what do we need to say to the audience? Can they stand up now?
If you want the future, you want the future. If you want a cup of coffee, go and get a cup of coffee.
Exactly.
Thank you very much.
Thank you.
Thanks, Barbara. That's
Thanks.
amazing.